It is time for Money Power Politics. And the line between Donald Trump, the president, and Donald Trump, the businessman, it pretty much doesn't exist anymore. Last week, he flew to Miami to give the keynote speech at a conference hosted by the Saudi Sovereign Wealth Fund. And the next day, he hosted the head of that fund, guess where? The White House, to discuss a deal to reunify the golf world. Remember, this fund not only invested $2 billion into a business run by Jared Kushner, President Trump's son-in-law, it also is the main backer of Live Golf, which has already held 5 major tournaments at Trump courses since it launched just 3 years ago. My friend Ron Insana joins us now. He's a CNBC senior analyst and the CEO of iFi.ai. And Charlotte Howard joins us, executive editor and New York bureau chief for The Economist. Ron, what do you make of this? I mean, I guess we shouldn't be surprised, but here it is.
Well, it violates, at least we think, the emoluments clause of the Constitution.
Okay, ready? Here's what the president did with the emoluments clause last time.
And Congress
and
is
he's going to do it again, and he'll be able to.
And at a scale the likes of which, to put it in President Trump's terms, we have not seen before. I mean, if you remember Spiro Agnew in 1973, then vice president.
We don't.
To Richard Nixon. Resigned over a bribery scandal that, by comparison, was extremely small. Richard Nixon's relationships with people like Robert Vesco and Bibi Rebozo were looked over time and time again, and some people went to jail. This is just happening in front of our eyes. There's no pushback from Congress. No one is really screaming about the fact that the president may, in fact, be making money off his relationships with the Saudis for his own personal benefit, which is prohibited by the Constitution unless Congress approves it.
Wall Street is potentially starting to get antsy, though. Last week at that same conference in Miami, you didn't just have, it wasn't just hosted by the Saudis. You had every major investor there, almost every major CEO there. And the New York Times was reporting that the mood in the room was antsy. I talked to a CEO in the room who said Howard Lutnick got on that stage and announced he hired Elon Musk. He came up with Doge. People are starting to get anxious. Just last week, we read Jamie Dimon sold almost $300 million of J.P. Morgan stock.
You had this really weird week last week where there was a high, right, in the S&P 500, and then by the end of the week, you'd seen this dip again. And so I think some of the anxiety that you described is showing up now in the markets, and particularly in consumer sentiment data. You have consumers who are expecting really high inflation. The expectations are near a 30-year high for what they think will be the outcome of Trump's tariffs. And you have investors wondering, across this array of things that Trump has done in his first month, the promise of Trump for people in the business community was that he would push deregulation and push tax cuts. And what you're getting instead, at least for now, is chaos and the potential for trade wars. And so how all of this uncertainty begins to factor into the stock market performance, I think, is something that you're going to see in the coming weeks and months, where you see people becoming just more anxious.
What about the massive layoffs we're seeing in the federal government? On one hand, listen, there's lots of people who say the government needs to be more efficient. Maybe there's jobs that don't need to exist. Yeah. But Apollo Asset Management has a piece out last week saying the data right now still looks good. But the trickle down we could see from tens of thousands of layoffs of federal workers, it could have a big negative economic impact on our economy.
Sure. Wait till you see weekly jobless claims jump. When people, if they don't get bought out, you start collecting jobless claims. And it was not just Torsten Slok, whom you referenced at Apollo, but also Steve Cohen, who I know and worked for at one juncture in my career, came out, and he rarely speaks publicly about the economy and markets, and said both tariffs and fiscal austerity, as preached by Doge, will be negative for the economy and the stock market. And Warren Buffett is sitting on a record $334 billion in cash at Berkshire Hathaway with no explanation. Now, those of us who know the greatest investor in the world and probably the greatest trader in the world, when they're both doing things like that, maybe you start to worry a little bit about the economy and markets.
I mentioned Jamie Dimon. He was on television saying it is too soon to tell the impact Doge will have. Watch this.
Everybody would know the government's inefficient, not very competent, and it needs a lot of work. I'm hoping it's quite successful. If there's overreach, things they're doing which are not legal, the court should stop it. But I'm hoping that's not the case. But again, it's very early stages to tell exactly what it's going to mean and how it's going to affect the economy.
What do you think?
I think you see a few things going on right there. I think that, on the one hand, it is too soon in some ways to tell what the outcome will be. And many CEOs and people who are leading these big banks have been calling for years to have regulations pared back, right? And so it's a mission that they agree with. It's the means that can be problematic. So I think you see that reflected in Dimon's comments. And I also think you see a reality now, which is that most CEOs got burned from speaking out against Trump publicly, and they're treading very carefully.
What do you think about that? Because when we talk about deregulation, especially in places like banks, the financial industry has 7 different regulators examining them. Is there an argument to be made that not that there's less regulation, but it can be streamlined? Maybe there doesn't have to be 7 different independent agencies. You know, unfortunately, we're not hearing that full explanation from DOJ. It's just, we don't need this, let's rip it out.
Well, but the crazy thing about that is we've had 7 different regulators for a long time, and we still had the great financial crisis of 2008, where almost everyone was asleep at the switch. The Federal Reserve, the comptroller of the currency, the FDIC. There was no CFPB at the time, but, you know,
and post CFPB, we had, what was it, 3 banks go under?
Republic Bank, yeah,
2
the
years
4th
ago.
largest bank in the United States went under for lack of supervision. So I think, obviously, we need more efficiency and more competence in the oversight of the financial system. Whether we need more people or fewer people is an open question.
Let's talk about...
Well, just on that, I will say that there are some measures that DOJ is taking that will make it harder for agencies to do their job in an efficient way. So take the SEC, the Securities and Exchange Commission, right? If you revoke access to Westlaw, this is getting a little geeky, but
that's
it matters.
okay. Tell this to us.
You have to be able to look up case law. You have to be able to understand the history of cases that pertain to a given issue. If you can't actually access a database, you're going and looking up these things in old books somewhere. I mean, it literally makes the agencies less efficient. So there are some measures that seem like they're cost-cutting in the short term, but actually they just hamper an agency from doing very basic workings of government.
You know, it's funny that you say that, because I actually saw a video of a federal worker who was laid off from his job, who was a Trump supporter, who said, I was excited to have a businessman as president. I was excited with the idea of Elon Musk, but I thought he would take a scalpel to the government when he looked at where he can make improvements. Instead, it's been a sledgehammer. Is that something that we don't realize about Elon Musk's style? Because he's never been a scalpel guy. He's always been a move fast, break things, sledgehammer guy. And that's been a great success for him in the business world. But he hasn't had to be responsible for 330 million people, which is the role of the federal government.
Yeah, the tech bro culture doesn't really work when you're disassembling government at this rapid and a pace, and as you say, with a sledgehammer. I mean, there are people who do extremely important jobs at the Federal Aviation Administration, at TSA, at places where we're seeing job reductions. And by the way, large corporations are required to give 60 days notice and access to health insurance when they're laying people off. We've not seen any such advance notice of these firings, potentially, if tomorrow is the day by which some people will have to resign.
When they fire people and try to rehire them, they can't even find their phone numbers.
Yeah, exactly. And so this is not, even businesses don't really run this way, despite what the point they're trying to make, that it needs to be run more like a business. It is a government. It is not a business. You don't run them the same way.
Ron, bad news for you. Charlotte's first visit for Money, Power, Politics.
You going to give her the win again?
She won the segment.
Lost last time,
You know what? You know what? I'm so sorry. Welcome aboard.
Was it the Westlaw reference?
Exactly. Welcome aboard. And you know what? Let me tell you.
I had Robert Vesco and Spiro Agnew.
If he would have hit me with the Westlaw, he knows I would have kicked him out. I would have been like, nobody knows what that is. Leave Ron.
You would have.
Charlotte,
yes.
She gets it.